Welcome to our video on revenue allocation and recognition in transaction currency. We'll explore how organizations can manage revenue contracts in non-ledger currencies, ensuring compliance and accurate accounting using current exchange rates. Organizations can model revenue contracts in transaction currency, using it as the basis for revenue allocation and recognition. This approach supports both ledger and non-ledger currency denominated transactions, enhancing flexibility and accuracy. This feature allows for accounting of recognized revenue, receivables, assets, and liabilities using current exchange rates. It ensures compliance with ASC 830 and IAS 21, crucial for organizations engaged in multi-currency commerce. The allocation currency basis option lets you designate the currency basis for revenue allocation calculations. When set to entered, contracts are modeled using transaction currency amounts, applicable to both ledger and non-ledger transactions. Billing and receivables activities are considered monetary, using current rates. Performance obligations, however, may be non-monetary, valued at historic rates when fully billed or collected, ensuring accurate revenue recognition. For non-ledger currency denominated contracts, the accounted option translates contracts to ledger currency at inception. This amount serves as the basis for revenue allocation and recognition, maintaining consistency across transactions. The revaluation process in general ledger adjusts contract asset and performance obligation balances. Operating at the portfolio level, it ensures foreign exchange entries are visible only in general ledger. Existing ledgers default to blank for allocation currency basis, maintaining original logic for non-ledger currency contracts. New ledgers use entered, benefiting from both methods for flexible revenue management. Organizations can test different approaches in a controlled environment, comparing accounting results to align with revenue policies. This ensures changes only affect new and unprocessed contracts. A new option addresses non-monetary treatment for contracts paid in full upfront. Designate performance obligations as monetary or non-monetary, aligning with business practices and revenue policies. The application converts non-monetary performance obligations using the initial performance date's exchange rate. This ensures fixed revenue recognition, unaffected by exchange rate fluctuations. Monetary performance obligations, not paid in full upfront, use current rates for conversion. This affects contract liability accounts and revenue entries, ensuring accurate financial reporting. Performance obligation identification rules are shared across ledgers, allowing continued use of existing rules. New rules can specify foreign currency treatment for precise contract account management. Conversion rate type settings define which rates are used for accounting distributions. If a rate is unavailable, distributions remain unprocessed until a rate is defined, ensuring accurate conversions. Revenue management supports thresholds for transaction price and discounts. These thresholds are based on accounted amounts, ensuring contracts meet specified criteria for accurate revenue management. The foreign currency treatment indicator in subledger accounting helps customize accounting rules. It directs distributions to specific accounts, supporting the revaluation process for accurate financial reporting. Price variance calculations measure pre-recognition changes due to foreign exchange. These calculations fall outside ASC 830 or IAS 21 scope, focusing on obligation and asset creation. Realized gains and losses are not included in deductible realized gain numbers for tax reporting. The general ledger revaluation process handles foreign currency gains and losses, ensuring compliance. Revaluation adjusts foreign currency balances to current rates, posting adjustments through journal entries. This process ensures liability or asset accounts are accurately stated at period end. User interface enhancements display allocation currency basis and foreign currency treatment indicators. These attributes aid in distinguishing contract details for precise revenue management. The Contract Activity Details report now includes conversion rate dates and rates. This expanded report provides comprehensive insights into revenue contract balances and accounting events. Backdated transactions apply as current dated against contract value. For non-monetary obligations, the initial performance event date's exchange rate is used, ensuring consistent revenue recognition. Thank you for watching our video on revenue allocation and recognition in transaction currency. We hope this information helps you manage your revenue contracts effectively and accurately.